They say top investors make money by catching a trend in its infancy, and that's what is happening with NFTs. With popular celebrity investors such as Mark Cuban and Gary Vee talking about the potential of non-fungible tokens, retail investors have begun paying attention to this new investment asset. Its popularity, however, can be traced back to 2017 when the crypto market was on a bull run. During this period, CryptoKitties, a new crypto game, was gaining momentum. Its transactions were going over the roof, accounting to over 12,000 transactions. This peak showed the potential of these digital assets. Today, NFT-based companies have developed through centralized and decentralized ecosystems. Companies such as Nifty Gateway, Foundation, and Zora have grown and become key industry players. Their growth can be attributed to the interest this new innovation has been getting from celebrities and buyers alike. In the crypto world, NFT-based tokens have seen a tremendous growth in 2021, with companies such as Terra Virtual Collect seeing over 1,000% returns this year alone. With everyone wanting a piece of this growing market, there are still several things one should be aware of before deciding to invest and hold NFT-related assets. In this article, we assess what are NFTs, reasons they are so popular, and things you should know before buying. What are NFTs? NFTs have been built around blockchain technology. They allow for the creation of digital media copy that can be sold by the copyright owners. This includes artists, sport personalities, or musicians that can sell these assets to make money. Unlike cryptocurrencies that are interchangeable, NFTs are unique in their own way. Once a buyer buys the digital asset in a centralized or decentralized ecosystem, they can then keep these assets as their own. They can then transfer the asset from their wallet and sell them in an open marketplace. Once the buyer puts the asset on the marketplace and sells, the decentralized network record the transaction. This record points a shift in ownership and shows the new owner authenticity in ownership. The technology used has been adopted in sports and real estate industries. In the sports world, virtual sports card trade has been on the rise, while the virtual real estate has been growing tremendously. Other big companies such as Nike and Louis Vuitton have also begun their infrastructural plans to start offering NFTs. Why are NFTs becoming so popular? NFTs' popularity can be attributed to different complementary elements. Among them include their convenience, investment viability, and brands adoption. Their convenience is supported by interoperability that allows assets to move across different ecosystems with ease. They can be placed on the marketplace with ease and sold, with ownership changing across the subject blockchain network. This gives them the tradability feature in open marketplaces. This digital asset popularity can also be traced to its economic viability. Their deflationary principles give them a scarcity element. With blockchain technology allowing smart contract developers to place supply hard caps, these assets then become scarce. As described by OpenSea.io, a developer can enforce programmatically that only a specific rare item can be created, while keeping supply of common items infinite. This does not only gives the asset scarcity characteristic, but also gives the industry authenticity. With the above characteristics, the digital assets have attracted developers, investors, and speculators. For investors and speculators, the scarce supply means a potential rise in price in the future. In that case, they can buy an asset, hold it, and wait for it to appreciate before selling at a higher value. Others are investing in crypto-related NFT companies that offer digital asset services, in the hope that the token's price appreciate with time. Celebrities have also contributed to the rising popularity of digital art trade. Such include Mark Cuban, who has bought and sold these assets online. A recent popular trade, however, was from a LeBron James fan who sold the athlete sports card for over $100,000. This and other celebrity-related trades have raised awareness on this emerging digital art industry. For things to know before buying NFTs. With the future of NFTs almost guaranteed to be a success, you should still be aware of certain things. The following are for things you should be aware of before investing in this digital art-related assets. 1. It's an infant market with massive potential. The NFT market is a young industry that is just starting. Its adoption is still at its infancy, thus presenting a massive upward potential for early adopters. Furthermore, it is built under blockchain technology, which is also at early stage of adoption. Combine the two, and you will see the huge return potential of investing in solid digital art projects. Although some may still refer to 2017 CryptoKitties bubble as a caution to the market, we must still refer to the conditions of the market then. During the period, the crypto market was massively overbought due to the huge ICOs happening during the time. As the bubble burst, it came down with the whole market, including unique ideas such as CryptoKitties. However, the idea of tradable digital art has remained alive and received attention in early 2020 until its boom again in start of 2021. Looking at the current growth in virtual reality technology, one can predict NFT to follow the same route. Even better, celebrities, influencers, and big brands have recognized the potential of creating these digital assets. As an investor, this is a positive sign as it shows that there is value in the industry if big brands and personalities are willing to risk their resources to create and design their own tokens. The NFT industry isn't even a billion markets yet, although its potential is much bigger than that. This presents an opportunity for investors willing to take the leap of faith and invest in this young industry. If it grows to its full potential, these buyers will be significantly rewarded with substantial returns on their investments, so they can appreciate in value in a short time. The primary motivation people invest in NFTs is that they can appreciate in price within a short period of time. If the art popularity grows, then it can lead to astronomical increase in price. So what caused the digital arts to increase in value? The value is derived from the popularity of the asset. Anyone can create an NFT, but its value comes from the popularity of the creator or the art itself. That's why celebrities and artist tokens cost thousands of dollars more compared to other regular created arts. The asset's popularity and eventual appreciation in value also contributed to the growth of blockchain games. A perfect example was the growth in CryptoKitties game, which allowed users to design and create their own virtual cats. As the game grew in popularity, the virtual cats created grew massively in price and sold for high prices. The CryptoKitties game was a motivation to the rise in blockchain games NFTs. People are nowadays creating virtual tokens around a certain game, hoping the game will grow in popularity so that they can sell their virtual assets. The idea also goes beyond games and has spread throughout the pop culture. Creators are creating different kinds of creatives with the hope to sell them in the future. Although few of these creative arts will be valuable in the future, it still shows the massive potential in this industry. This is the reason investors are flocking to buy NFT-related tokens and assets. 3 NFTs are still risky. All investments carry relative amounts of risks. The ones with high gain potential also carry high risks too. This is the case with NFTs, where they can have high volatility and price movements. Before buying an NFT, make sure you are investing money you are willing to lose. It is a highly volatile market that can have extreme swings. Just like in crypto, the only leverage you can have is to carry out significant research before investing. You could also find yourself buying an overpriced digital asset. The loss can be even greater when you buy an asset for thousands of dollars and later sell it for a couple of hundreds. These swings of volatility can be traced back to all growing markets where equilibrium prices haven't been established. In this case, an experienced buyer might find themselves buying overpriced sport cards or videos. As time goes on, they find few buyers are even willing to meet the buying price, forcing the buyer to sell at a loss. These swings are the reason inexperienced NFT enthusiasts are advised against buying well-established NFTs. Instead, they should be looking for unknown, undervalued, and under-the-radar assets to speculate. If things go well, they can make good profits, but if not, then they don't lose significant amounts of money. As also advised by InvestorTrend.com, we always advise purchasing speculative NFTs instead than well-established ones in the hope that you will find a buyer willing to pay than you did. For not every NFT investment will become valuable. There is a misconception that every NFT will become valuable over time. This is not true, as the value of your asset will depend on its popularity over time. You will sometimes find yourself with a less popular art that no one wants. It is always important to remember that the value of your NFT will depend on people's tastes and likes, just like in any other forms of art. With this in mind, it is always important to take caution when buying these assets, as what you like doesn't mean that everyone wants it. The less risky idea would be to invest in NFT-related companies. This include NFT marketplaces and design companies whose demand will increase with rise in the demand of their services. Most of these companies are crypto-related organizations that can be traded on centralized and decentralized exchanges such as Uniswap. However, this approach still carries risks, as no one knows whether these tokens will rise in value over time, thus always advisable to conduct extensive research and invest what you can afford to lose. With crypto-related NFT tokens, however, you don't have to struggle looking for a buyer as experienced with holding the digital art. Most crypto assets have sufficient liquidity where you can sell in a few minutes if the tokens appreciated in value. Should I still invest in NFTs now? With the CryptoKitties and crypto market bubble of 2017 and eventual crash in 2018, some may be worried that we might be heading for a similar period. The sharp rise in the market can be attributed to the rise in demand and also an increase in speculative behaviors. This might have created a bubble in the NFT market that some might still have some reservations on entering the market right now. Few can tell where the NFT market will head in 2021, thus impossible to tell whether now may be the best time to buy NFT-related assets. Nevertheless, it is critical to understand this is an infant market with huge potential, thus we might continue to see sharp swings in the next few years. As with any investment, the best idea would be to look for companies with offering a solid value proposition to the industry. Even with the storms of volatility, these companies with solid fundamentals will still stand strong. It is also important to approach the market with a long-term mindset. Although short-term profits can be addictive, it is essential to take a position and judge it after a few years. Provided you have invested in a solid company with strong fundamentals, then you should keep your emotions in check even when market is going down. For those wishing to buy the NFTs rather than investing in virtual art companies, the trick is to find undervalued arts. Stay away from already established ones and look for upcoming underpriced ones that can make you significant returns. Also, if they don't sell, then you don't lose huge sums of money from your initial investment.